Good morning, everyone. Welcome to Windsor Brokers live daily market outlook for Thursday, 1st of November 2012. We are at the beginning of the new month with the quite important events ahead of us. Tomorrow's U.S. jobs data and, of course, the U.S. elections due on Tuesday are the main focus for the markets, as most of instruments are still, if we take a look at the larger picture, still holding the ranges and not moving through either of the barriers. For example, the euro is still within 128 and 131.70 range, with of course the near-term structure slightly skewed towards the downside following yesterday's upside rejection and this morning's fresh weakness on the Greek delay of aid until November 12th, as well as the Dow Jones agency informed that Spain would extend its actual short selling ban for 3 extra months. Generally, no significant action seen in the markets, with the euro as set being entrenched in the 128, 131.70 range, while sterling is gaining some ground following a bounce of low of 2 days ago at 160, now breaking above this morning's bounce above 161.42 high, sees some more prospect towards the upside, and the break above basically 161.78 to 161.80 could be signal for a major recovery, and to signal a higher low as a part of the broader uptrend of the pair from the beginning of June at low 152.67. I would say the more important is seen on the gold, that is currently attempting above our initial barrier at 1720. That will signal end of the current consolidation and signal possible stronger recovery of the down move from a yearly peak at fresh yearly peak at 1795. That bottom, that 1700, where the good support was found, with the break above main bear trend line, signaling some a possible stronger recovery. Similar with the crude oil, that is now picking up pace after finding ground at 85 zone, attacking basically the upper boundaries of the near-term range, with yesterday's spike up to 87.17 being one of the initial signals. A break above, we mentioned I think in yesterday's session, above 87.70 and 88.00. First one is the previous low and the second is Fibonacci resistance, would be quite a good signal for stronger recovery of the latest down leg of crude oil from 93.50 down to 85 zone. Dollar yen remains in the positive path, has fresh strength of near-term base at 79.27, has regained the important 80.00 barrier. Yesterday, 80.12 tested actually the previous high of 2 days ago at 80.13, and the brief consolidative corrective action is now underway. 80.00 so far holds. The downside, there was a tick down to 79.91, but overall the positive picture still sees more potential towards the upside. The recovery is seen on the dollar Swiss after dipping down as low as 92.75, regaining 93 and 93.30 zone. That was the previous peak, attempting to complete something that looks like inverted hand and shoulders pattern. That will be quite bullish in case of a firm break higher. More of all this we're going to discuss in our technical part that will come out shortly. Just to take a quick look at our calendar. I do apologize for today. Again, we are getting the new calendar, and we are having now some technical problems with the current calendar. Basically, every day, all other days in the week are okay, except today's one, where we have times and events slightly shuffled. In any case, quite thin calendar for the Europe, but quite busy for the States, and we are going to focus on States as they come, unfortunately, completely upside down as they come at the top of the calendar. The US ADP non-farm employment change that is due at 12:15 GMT is again showing some rather disappointing forecast compared to previous release. 162,000 was the release in September, while today's forecast for October is 138,000. Reminder, this is the one of the main indicators for the U.S. non-farm payrolls that are due tomorrow, and usually, but not as a rule, sometimes indicates the release of the U.S. non-farm payrolls, the key release that is due tomorrow, key release of the week. Unemployment claims for today, a slight tick higher, 371,000 compared to 369 compared to 2 weeks ago. A dip to the fresh 2 years low at approximately 330,000, something like this, and not 100% sure, with the non-farm productivity expected to fall in October to 1.3% compared to 2.2%. Quite disappointing forecasts for the United States job data. Of course, main confirmation will come tomorrow on the US NFP release and unemployment rate, where we will have a more clear picture of whether this is a good signal or a bad signal. But generally, other indicators that were released recently are still having showing some positive tone developing in the US economy, and the possibility of possibly picking up the pace of the recovery from the current crisis. As said, the U.S. non-farm payrolls data, we're going to just take a look for tomorrow's release. Unemployment rate in states is forecasted to tick higher for tomorrow, of course, at 7.9% compared to 7.8%, while non-farm payrolls, according to the forecasts, are going to be higher in October than September. A slight increase, 125,000 is the Reuters poll of analysts showing the forecast versus the September at 114,000. Of course, the tomorrow's release will give us some more clues. Further today, these data are due at 12:30, as we can see, except the non-farm employment change that is at 12:15 GMT. At 13 GMT is the final manufacturing PMI for October, that is showing, according to the forecast, improvement 51.5 compared to 51.3. Quite supportive as long as it's holding above 50 break point. With the next manufacturing ISM in manufacturing PMI due at 1400 GMT. In this case, forecast is slightly below the September's release, 51.2 versus 51.5. Consumer confidence, according to the forecasts, is expected to improve to 72.4 in October compared to September's 70.3. U.S. crude oil inventories that were due yesterday are moved to today. The latest information we have that are going to be released at the same time at 14:30 GMT. We will keep an eye on this, and in case of any change of the release time, as usually when the agency moves, usually due to the holidays, then the release comes half an hour later. So far we have this information. Anyway, the crude oil inventories are forecasted at 1.5 million. Yesterday we mentioned them, and they were listed in yesterday's calendar. Unfortunately, the info came from Energy Information Agency, came after our morning session, so I mentioned it as it was due to be released yesterday. This was according to the information we had yesterday morning. 1.5 million barrels build is forecasted compared to build of 5.9 million barrels in the previous week, and this is more or less the most important for today, as most of the European countries are shut due to the holiday. Not much to be seen. From Swiss, we have already released the retail sales and the PMI that is due in a while. We're going to take a look just if we have any release at this point. Our calendar hasn't been updated yet. Retail sales came at 5.4% compared to 6.4% forecast and 5.9% in September. Quite good compared to the quite disappointing release for the retail sales, as the release dips below the previous one and well below the forecast with the PMI for October due at in approximately few minutes. 44.6 is the forecast compared to 43.6 release of the previous month, and at 9:30 we have the U.S. UK's manufacturing PMI for October, 48.1. Below is the forecast below the September's release, and that would be basically all for from today's calendar. So not to waste more time, we're going to move to our technical part and see the latest movements and see what we can expect in the coming hours of Thursday, 1st of November 2012. Okay, as always, we start with the single currency. I will wait a few seconds until you see the screen. Okay, now I think you can see. As said, the euro is forming a head and shoulders like pattern following the yesterday's upside rejection at 130.20. This was our initial target on the upside after break above 130. This is also the high of 25th of October 2012, where the gains stalled and subsequent sharp reversal basically returned to the beginning of yesterday's day levels, approximately 129.50, with most of the overnight session spent within the narrow around 20 pips range consolidation, as fresh weakness came this morning, dipping as low as 129.23. This is equivalent to our interim support en route towards strong base at 129, 128.85 levels, with the hourly structure still negative, as most indicators are still pointing, are still in the negative territory, starting to point higher for now from the 129.23. I would say the break above 129.50, 129.70. This is which is the range floor and the range top of the overnight's consolidation would bring some more positive tone into the near-term structure, and probably to prevent the pair from a further easing. 4-hour structure is, I would say, improving at this point, as MACD is slightly above the midline, as well as momentum 22, but still pointing lower, while a good signal would be the current reversal of the stochastic. That might be signal a fresh push higher. As said, we need to see break above 129.70 minimum. This is the peak of overnight trading, in order to possibly refocus upper boundary barriers at 130 and 130.20. Daily structure is still quite weak following the upside rejection at 131.70 on 14th of September, and the repeated attempt higher failing at 131.38 on 17th of October, still keeping the pair within this range, as downside is so far well protected by 200 days moving average at approximately 128.30, and the double bottom at 128.00, 128.25. Currently the pair is struggling around the trend line, main bull trend line of 120.42, with the no clear break seen as yet, as the pair hovers around the trend line, which is currently at 129.30. Several attempts lower proved to be false breaks. Probably in case of this trend line being supportive and holding the downside, keeping the downside intact, probability of possible fresh bounce higher is quite likely, but said we need to see the break above 130.20 as our initial barrier, and 130.40 as a Fibonacci 61.8%. in order to pick up the pace and refocus upside barriers at 131 and then 131.38 and 131.70. Important at this point is that the broken channel resistance or main bear trend line of 131.38 hasn't been breached towards the downside. Brief break and a quick reversal up still sees this as a good support. This was mentioned in our morning's report as 129.45.50, offering initially good support ahead of 129.20, and then strong support zone at 129.00, 128.85. In case we see the footstep at 129.20 holding the downside. Probability of possible bounce higher could be seen, but as said again, 129.70 break above this level is required to ease the immediate bear pressure. Otherwise, the likely scenario would be further easing and a possible test of initial support at 129, 128.85. We had several attempts failing at this zone, offering quite good support and the near-term base, and this is also equivalent to the 4-hour lower Bollinger, which is currently at 128.79. A good support break of which is to weaken the structure for possible test of the key support zone at 128.30, 128.00. And the cable holds its positive sentiment with the sharp rally seen in the recent half an hour, breaking above congestion at just under 161.42. Yesterday, the pair reached a fresh high at 161.37, nearly to fully retrace 161.42 to 160.05. Corrective pullback, consolidating within 20 pips range ahead of a fresh rally this morning that cleared 161.42, 161.66 insofar, just ahead of our next upside target clearance of 61.8% Fibonacci retracement of the entire down leg from 163.08 down to 159.11. Sees now more scope towards 161.78 and 162.00, a break of which basically to confirm the higher low at 159.11 and the open way towards the upper barriers 162.16 will be seen next ahead of static one at 162.71 and then key resistance zone at 163.00. The hourly the daily structure is slightly turning into the positive territory, yet break above 162.00 is required to confirm as the pair remains well supported on the Ichimoku studies. Break above daily cloud top at 161.26 with price holding well above Tenkan and Kijun Sen lines, giving the bullish signal on the Ichimoku studies. ADX shows bulls firmly in play in 4 and in 4-hour chart, while daily is still lacking momentum for some stronger action. Break above 162, I would say 162.16 is to improve the structure on the daily ADX studies. As said, 161.78, 162.00 are seen as our next upside targets, with the hourly indicators now entering the overbought territory. This could signal some hesitation ahead of important 161.78, 162 barrier, but overall bullish tone still keeps the upside firmly in focus. I would say any dips should be contained at or above 161.00. That is low of yesterday's intraday low, and 55 days exponential moving average is shown on the hourly chart. Any dips from here and below 161.20 should be in any case contained at 161.00 in order to keep the positive structure intact for a test of our initial upside targets, 161.78 and 162.00. On we have some question. I will come at the end of the session for the questions. I do apologize I didn't mention, as I can see, some new names today with us. Questions and answers comes at the end, so you will have your time to raise any question, and I'll be glad to answer. Usually we practice the way that I do the presentation, and then you come with your points and questions. So just briefly to finish the technical part, and then we'll move to the questions and answers. Dollar yen remains in the uptrend of recent higher low at 79.27 posted 2 days ago, with the test of previous highs insofar 80.13 ahead of current and consolidative corrective action. A brief break below 80.00 as our initial support allows further dips without near-term bulls being harmed. I would say ideally down to 79.80 reversal should occur at this level, as this marks 38.2% retracement, and as well as being reinforced by ascending a 55 days exponential moving average. So any dip lower to find a good support and reverse at this point in order to keep the near-term positive structure of 79.27 for possible test of our key near-term barrier at 80.37. This is the high of 26th of October. That will open way for test for further extension of the bullish rally from 77.12 mid-September low, and the open way towards 80.65, 50% Fibonacci retracement of the reversal from 84.17 yearly peak posted on 15th of March 2012 down to 77.12, 13th of September low. Conversely, a loss of 79.80 and more important 79.50 level, which is approximately 38.2%, would refocus 79.27 and allow for a deeper reversal. This is basically seen as a risk in case of a break below 79.80 and 79.50 that might confirm might signal the formation of a double top at 80.13 with a loss of 79.12 required to confirm it. That would be quite a bearish signal for the pair. And the dollar Swiss is attempting to complete inverted head and shoulders like shape after finding support at 92.75 yesterday with the break above 93 as initial barrier, and the previous peak of yesterday at 93.30 with 93.39 seen so far. This is marking approximately exactly 61.8% retracement of the down move from 93.80 to 92.75. Gains so far stalled at this point, but overall a positive tone that now dominates on the 1-hour chart, as well as 4-hour indicators pointing higher and about to break above their midlines as the price lifts above 55 and 20 days moving averages on the 4-hour chart, and as well as 10, 20, 55 days exponential moving averages on the hourly chart, keeping the near-term focus at the upside. Of course, a break above 93, 40, 50 is required to refocus our key barrier at 93.85, which that marks a 200 days moving average that is that keeps capping the upside since mid of September, with the brief breaks higher being seen as a false breaks. This is also equivalent to the daily Ichimoku cloud base, currently at 93.83. Break above these levels is to open a way for a stronger recovery and basically break above the nearly 2 months range top at 94.30-36 to signal a stronger recovery of the pair. Any failure under 94 would signal that the pair will be still moving in the sideways mode and entrenched within 94 to 92 range. Bearish tone on the crude oil. If we start with the Ichimoku studies, daily structure remains firmly bearish following the reversal of 100.72 peak of 14th of September, as the price is currently in the third wave of 100.72 following break below the 91.26 daily cloud base and extending losses as low as 84.67 so far, holding below the cloud and holding below the Tenkan and the Kijun-sen lines. 4-hour Ichimoku is still bearish, but gaining a light bullish signals as pair breaks above Kijun-sen and currently attempting through the Tenkan-sen line that's currently at 86.38 with the cloud base at 87.00, seeing as good barrier penetration of the cloud would be another although bullish but still a weak bullish signal for the oil price. From the trend analysis, bulls on the 4-hour chart are firmly in play, following bounce of 84.67 as the price approaches initial attempt at 55 days exponential moving average at 87.24 has failed. So we have this barrier 87.10 currently as the next one ahead of peak of 24th of October at 87.45, and then more significant is 87.70 low of 3rd of October 2012. Also, it's 38.2% retracement of the down leg from 93.50 to 84.67. As said, the slightly positive tone seen on the hourly chart with the improving 4-hour indicators, but still lacking momentum as 55 days moving average still keeping the upside limited for now. As said, clear break above 87.70, 88.00 would be a good signal for a further recovery. Otherwise, extension of the current sideways movements would be likely scenario, while break below 85.00, 84.67 would signal further bearish extension as larger picture bears remain firmly in play and keep the focus down at 84.67 initially, and then 83.64 low of 10th of July 2012 ahead of our third wave projection at 80.50. That will be the next target in case of loss of 83.64. And the good signals seen on the yellow metal following a brief break above initial barrier and the 23.6% retracement of 1795 to 1700, more correct 1698 descent. Finally, bulls seems to be waking up with the 4-hour indicators now breaking above their midlines and the hourly ones already holding in the positive territory. 1725, approximately 1726 insofar. This is yesterday's peak. Picking up momentum for a possible stronger recovery and the retracement of 1795, 1698 descent with the next important level seen at 1730 zone. This is the near-term break point, break of which to open Fibonacci barrier at 1735, 38.2%, above which is to signal a stronger recovery. Any failure, I would say, at this point below 1735, 1740 would be still seen as a mild correction, as basically the larger picture indicators are still well in the negative territory and still showing indecision, as triple doji seen on the daily chart still doesn't give us a clear direction of the yellow metal. Of course, the current attempt through 1720 is seen as a good bullish signal, yet 55 days moving average currently at 1726 that is capping the upside to be cleared in order to confirm that the stronger recovery is underway. That was all from my side for today. If you have something to ask or something to add, something that I might have missed, you can submit your questions now. The time zone, you have to tell me in which country you are. We had a slight delay this morning, I agree with you. Which country you are, so I can tell you exactly, or what time is it now there in your place, so we can adjust ourselves. All our timing is in the GMT, so you can judge it easily. Okay, so you are 2:13 p.m., which means that we are 3.5 or 4.5 hours different. In any case, 5.5 hours. Okay, your GMT. Okay, GMT 5.5 hours plus. We are GMT +2, so we have 3.5 hours difference. Basically, the release of our daily outlook should be around, if I'm not mistaken, at 2 o'clock or a quarter to 2 your time. In any case, in case you miss it due to the time difference, all our sessions are recorded and uploaded into YouTube. Our page is called the Windsor Brokers Forex, so you can always go there and find the whole version, whole session recorded and listen to it. Of course, when you are in the live one, you have a chance to interact and ask questions. But in case of any failure to connect at the time of the live session, you can always view it on the recorded one. Any other question, please? Yeah, I can. Of course, I can give you the. I can give you the access to the websites. Let me just take a look. It might take some time. Okay. Okay, here is the link. Did you get the links? Okay, you are the new in the currency market. Very good. If you go to Windsor Brokers website, I assume that you are a client of ours. If not, then you can go to windsorbrokers.com. If you are not a client, then you have to register for at least demo account, and you might get access to the membership area. I'm going to show you now how it works on the website. Just take some time to show. Okay, you go to the education, and if I'm not mistaken, trading strategies. There is a whole seminar about trading strategies. Wow, I need to log in. I do apologize. Basically, you can find it here. So you go to education, trading strategies, all these Forex beginner, you can find everything, and it's quite good and useful. Of course, you can come on our session and we can discuss the details, but we suggest this always as the beginning for everyone who is the new one in these things to read, to listen, and to learn something, and then of course we can come and discuss all the details. I can give you additional explanations about all the technical analysis tools. So I think that's a good thing, good point to start. Any further questions, please? No more. Okay, in this case, thank you all for attending our sessions. Yes, I will to identify. Of course, you can always ask for the registration details, and the most important is the regulation. I think if the broker is not regulated by any recognized body, then you should, you should stay away, or at least you should be very cautious. But this with the brokers is registered and ruled by SISEC, which is part of European Union regulatory body, and fully licensed for this job. So you should be looking for the regulation certificates in case the broker has all the regulation is regulated and controlled by any of the recognized bodies. Then I think you should be okay. In any case, thank you all for being with us. To check the brokers, yeah, you have to go, if you have the name of the broker, you go to their website, and then you will see their all credentials and the certificates that they have. You have to go to the specific page of each broker and see are they regulated or not. But the regulation is, I would say, the most important thing. If the broker is not regulated, then you could be in quite big danger. In any case, thank you for being with us. We expect to see you tomorrow again at the same time at 8 o'clock GMT or whatever it will be your local time. I wish you a nice day today and very successful and profitable trading. Good luck.